Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at TWLO, or Twilio Inc. TWLO provides programmable communication tools for making and receiving phone calls, sending and receiving text messages, and performing other communication functions using its web app service APIs. Here's the barchart.com technical opinion rating for TWLO. The bar chart technical opinion rating is a 100% sell, with a strengthening short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bear trend on a monthly basis if the stock price is below the 10-period or 10-month simple moving average. The monthly chart shows that TWLO is well below the moving average line, so the monthly trend in TWLO is down. Now we're going to look at the daily chart. A stock is in a bear trend on a daily basis if the 50-period or 50-day exponential moving average is below the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The daily chart shows that the blue line has been below the green line since the chart started, so the daily trend is down. Since the monthly and daily trends are both down, TWLO is on our sell list. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy puts if the stock price is below the lower Keltner channel line. Anywhere inside the Keltner channel or even above the Keltner channel is fine. The TWLO stock price is above the lower Keltner channel line, so TWLO is inside the sell zone. Since the trend is down, we want to buy a put. TWLO has plenty of option chains to choose from. We're going to use the October 21 option chain. Right now, the October 21 options have 26 days to expiration. Here's most of the TWLO option chain for October 21. TWLO closed at 68.13 on Friday. That means any puts on the list from 90 to 69 are in the money. Let's take a look at the profit potential for purchasing the TWLO 68 strike put, which is the closest strike to the current price of the stock. The bid-ask spread for the 68 put is 520 to 540. We try to enter at the midpoint, so we use 530 as the buy price. Our put option calculator shows the profit potential for this put based on TWLO price changes at option expiration from flat to a 12.5% decrease in price. We can see that if the TWLO stock price is flat at 68.13 at option expiration, the 68 put will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move down 1% for the put option we purchase to break even and start profiting. Now let's take a look at buying the 80 strike put to see if it qualifies for the 1% rule. Here's the put option calculator for the 80 put. According to the 1% rule, we want the put to at least break even if the stock price is down 1%. The calculator picture shows that if the TWLO stock price is down 1%, the 80 put will lose 5.6% of its value. We want that to be break even or better, so the 80 put does not meet our requirements. Let's see if the 90 put will work. The bid-ask spread for the 90 put is 21.70 to 22.65. We tried to enter at the midpoint, so we'll use 22.20 as the buy price. The 90 put works. If the TWLO stock price is down or 1%, the 90 put will make a 1.6% or $35 profit. That's better than break even, so the 90 put is the one we'll buy. The put option purchase calculator also shows that if the TWLO stock price decreases by 2.5%, the 90 put will make a 6.2% or $137 profit. If the TWLO stock price decreases by 5%, the 90 put will make a 13.9% or $388 profit. If the TWLO stock price decreases by 7.5%, the 90 put will make a 21.5% or $478 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the TWLO stock price does not make the expected move down and remains flat at expiration, the 90 put would only lose minus 1.5% or minus $33 compared to the 100% or $530 loss for the 68 strike put that we looked at earlier. Now we want to review a put option debit spread, aka a vertical put spread. For this spread, we want to buy to open the TWLO October 21 80 strike put and sell to open the TWLO October 21 70 strike put. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 80 put for $13.30 and sell the 70 put for $6.35. $13.30 minus $6.35 equals $6.95. So the entry price or debit cost for the spread is $695. The put option spread analysis calculator picture showed that the spread will make a 43.9% or $305 profit if the TWLO stock price increases by 2.5%, remains flat, or decreases in price when the options expire. If TWLO is up 7.5% at expiration, the trade will lose minus 2.7% or minus $19. Creating the debit spread will allow us to collect a $635 cash credit to our brokerage account for the sale of the 70 put. As we said on the previous slide, this reduces the cost of entering the spread to $6.95. Here's a note regarding earnings reports. The next TWLO earnings report is scheduled for November 3rd. Let's review the trades one more time. The first trade was a put purchase. It said to buy to open the TWLO October 21 90 strike put for $22.20. We also reviewed a spread. The spread said to buy to open the TWLO October 21 80 strike put and sell to open the TWLO October 21 70 strike put at a debit of $6.95. Thank you for joining us. We look forward to seeing you again next week.